There's a fundamental law of global finance, a rule as old as modern markets. And right now, in Japan, it is shattering. For decades, the mechanics were simple. When interest rates go up, capital flows in, and the currency gets stronger. It's Finance 101. But look at Japan today. Bond yields are exploding. The 40-year bond has breached a historic high, a level never seen before. By all logic, the yen should be soaring. Instead, it's in freefall, plummeting towards 160 against the dollar. This isn't a technical paradox. It's a signal, a terrifying vote of no confidence. The markets are no longer rewarding Japan for high rates. They are punishing it. They don't see strength. They see the desperate actions of a nation losing fiscal control. A nation buried under a public debt mountain more than double the size of its entire economy. For years, Japan survived on a life support of zero interest rates and central bank magic. Now, the very medicine that was supposed to signal recovery high rates is becoming a poison, threatening the sustainability of its colossal debt. And because Japan is the world's largest creditor, a central pillar holding up the entire global financial system, its problem is about to become our problem. What is truly unfolding in Tokyo is not just a currency crisis. It's the beginning of the end for an entire era of easy money. And to understand what comes next, for all of us, you need to understand what's happening in Japan right now. Stick with us. So, how did we get here? For years, Japan has been running a high-wire act, defying economic gravity. With a public debt soaring to 230% of its GDP, the highest in the developed world, it should have collapsed long ago. But it survived, thanks to a unique life support system, artificially low, even negative, interest rates, and the massive, relentless intervention of its central bank, the Bank of Japan, which printed money to buy its own government's debt. It was a closed loop, a carefully balanced machine. But that balance is fragile, and the trigger for the current crisis was political. The rise of a new, aggressive fiscal stimulus plan, dubbed Abenomics 2.0, spoke the market. This wasn't seen as a solution. It was seen as gasoline thrown on a fire. It revived the deepest fear, a complete loss of fiscal discipline. The reaction was immediate and brutal. A mass sell-off of Japanese bonds, sending rates skyrocketing and the yen into a nosedive. But the real danger isn't confined to Japan. Because Japan isn't just another country, it's the world's financial linchpin. The planet's #1 creditor nation. For decades, its vast savings have funded the world. Imagine your main bank are suddenly needing to call in all their loans, all at once. This happens in 3 critical ways. First, Japanese investors, from giant pension funds to individuals, are the largest foreign holders of US government debt. If they start selling those bonds to bring their money home, a process called repatriation, US interest rates will be forced upwards, making everything from mortgages to corporate debt more expensive for Americans. Second, the famous yen carry trade is unwinding. For years, investors borrowed yen for almost free to buy higher-yielding assets around the world. As this trade reverses, it creates massive selling pressure on global assets. What we are witnessing is the slow, painful end of an entire financial era. The age of easy money, where central banks could solve any problem by printing more, is over. Japan is simply the first domino to wobble. Its crisis is a blueprint, a warning of a new regime of risk for every developed economy carrying a heavy debt load. So this is not a story about Japan. Not really. It's a story about a blueprint. A warning. Japan is the canary in the global coal mine, and the canary has stopped singing. Every major developed economy, from the United States to Europe, has played a version of this same game for the last 2 decades, using low rates and debt to delay difficult decisions. For years, we've heard the metaphor of kicking the can down the road. What we're seeing in Japan is the logical conclusion of that strategy. The can has been kicked to the very end of the road. There is no more road. This isn't just about abstract numbers on a screen. This is about the fundamental stability we've taken for granted. The value of our savings, the cost of our homes, the security of our pensions, all of it was built on the foundation of the old rules. And that foundation is now crumbling. The question is no longer if this new, uncertain era will arrive for all of us. The tremors from Japan tell us it's already begun. The real question is, what will we build from the ruins of the old world? The conversation doesn't end here. The global financial system is interconnected in ways most people never see. What are the other fault lines you're watching? Share your thoughts in the comments below. And if you value analysis that connects the dots and looks beyond the headlines, subscribe and hit the notification bell. You won't want to miss what comes next.